What's happening, guys? So on this video I'm going to go through draws on liquidity and how we actually identify draws on liquidity within the markets, so you can get an understanding of where price is likely to draw towards after taking certain liquidity points, and actually get an understanding of where we are likely to move in the market. Firstly, I'd like to point out that we trade on New York times on the charts, just so we're all aligned with the actual New York market. And the first draws on liquidity I want to go through is Asia highs, Asia lows, and London highs, London lows. So I'm just going to actually type Asia highs and lows, equal highs and lows, previous day highs and lows. We've got the daily highs and lows. So we've got data highs and lows, previous week lows and highs, new week open gap, and we've got daily, new daily open gap. Hopefully you've made a note of all these. These are the ones what we'll be going through in this video. And now that you've got all those written down, then we'll go through them. So London highs we'll go through, and the actual times of which time, what session times they run at, and Asia lows and highs and which times they actually run at as well. So we start by doing this on the 15-minute time frame. So we've got London high here. So we mark that like that. We've got London high. So London session actually runs between 2 AM to 5 AM. This is New York time. 2 AM to 5 AM, that's London session. So we look at where's the highest point at 2 AM, or between the actual range of 2 AM to 5 AM, because it might not be always at 2, it might be like 3 o'clock, 4 o'clock. So that's London high, what we've marked. And the London low would be here, but we've already swept London low. So that's how you mark out London high, London low. Now Asia high and Asia low runs between 8 PM to 2 AM. That's Asia session. So we want to be looking from 8 to 2 o'clock. So that would be our Asia high. Asia high there. And the Asia low would be, actually have the Asia low here. But we've already took that. So any what we've already actually swept, we just get rid of. So just get rid of them. You can keep them if you want, but if you know you've already took them, you don't need to look for them anymore. So that's Asia high, London high marked out. So the next ones we'll be going through is equal highs and equal lows. As you can see here, we have a set of equal highs. So this is a strong magnet for where price wants to draw towards. So that'd be your equal highs. You can have equal highs and you can have relative equal highs. These are more like equal highs. You can visually see them because when you draw a line across, they are literally the same height in price. Then we'll go through equal lows. You've got a set of equal lows here. Now this is also a strong magnet in price for where price wants to draw. Usually it sweeps it by doing this. It'll close below well, it'll sweep the price and then it'll carry on moving up to take the opposing draw. So that's how I mark equal lows. Previous day highs and lows. So for previous day, we look at the daily. So previous low, we've already swept. You can see here that this is the previous daily candle and this is the low. I'll mark it out for you. This is the low there. But as you can see, we've already took this low with the next daily bearish candle. So the actual previous day high is up here, as we can see. That's your previous daily high candle. And then we've also got the daily low, which is here. And then we've also got the daily high, which is there. You can also mark it on the 15, but sometimes people who are less used to seeing it on the 15, it's a bit harder to spot. But basically, you look at from between 12 o'clock, so right at the start of the new day, and then between where price is now and where's the lowest point we've got to, which is here. So this is the daily low. Okay, and then you look again between 12. So this would be a daily high. This candle here, that's your daily high. That's your daily low. So for the previous week low and high, we're on a Friday currently. So if we go back to Monday, and then we go back again, so you've got Friday starting there, and then you've got Monday. Monday is there. So you've got Tuesday, that's the lowest point within that week from Monday to Friday. That's the lowest point there. So we've actually took, you can see that we've actually took the previous weekly low there. And then you do the same again. So from that Monday to that Friday, the highest point in price for that week would be here. So that's your previous week high, and that's your previous week low. Now what we'll move on to is the new week opening gap, which is here. So between Friday and the Monday, or the Asia session, which starts on a Sunday at 8 PM, you've got a gap in price where the market closes for New York for the weekend on a Friday, and then it opens back up on Sunday for the Asia session. So what you have is a gap in price here. And we treat those like fair value gaps essentially. They need to be filled, and typically price will come back down and actually fill those gaps. Okay, and you also, price tends to at least fill 50% of these gaps. You can see it's not actually closed through this gap here, it's closed and then it's moved away. So it needs to actually fill this price area of where you've got the gap. So that's it for draws in liquidity.